What's up, YouTube? Listen, family, it's the weekend, so you guys already know classes in session. So do me a favor, feel free to grab a cup of coffee. More importantly, please take some notes, guys. We're going to cover some things that I want you guys to not only digest, but I want you to be able to go out and apply it as early as Monday at market open. Okay, I want to make sure you guys are learning how to properly make money on this journey and during this bear market. Okay, so we got a lot to unpack today, so keep it locked and let's go ahead and dive into the charts. Okay guys, check it out. I have the SPY, something I talk about every day in the Discord, pulled up for you guys, and this is the 5-minute chart. Okay, listen, I took off all my indicators. Those that don't know, my indicators are the 13, 48, 13 EMA, 48 EMA, and the 200 EMA. EMA is exponential moving average. But I wanted to give you guys a clean look at this 5-minute chart because I want to teach you a couple things, because the market is all about patterns, and I need you to start spotting them and identifying them so that you guys can make money a lot more efficiently in this difficult time. All right, so check this out. To my right, you can see in red along the right side, you see 357 is in red. That is the closing price of the day on Friday. Okay, why is that significant? Because everything in the market, these prices aren't just for any reason. At some point in time, this price will come back and be significant. For example, if this drops to 330 or 300, when the uptrend starts and we start going back up again, you will be surprised at how this number becomes a factor or gets touched or tested. Okay, with that being said, let's go ahead and dive into it, guys. Check this out. Follow along with my screen. Look at this big green candle, this whole line right here, this whole run up, I should say. This was on Thursday. Okay, right after the bad CPI report, the market ended up running up and then doing something it has only done 3 times in the history of the stock market. It has never done this at this level. Okay, only 3 times, but it ran up, and so we were looking for the fact that it broke through every resistance level, so that was telling us something. Okay, but listen to this, guys. I'm showing you this because every strong move up will eventually have a strong move down, and this is where the lesson comes in at. But check this out. In Discord, I talked about on Friday morning, from based on where SPY was at, that this would hit 370. Okay, so as you can see, around 9:30, look at this, 9:35, the SPY went and hit 370. I caught this play and made a couple $1,000s on this move. We had a morning dip, then a rip. Okay, we call it dip and rip. So this went to like 368 and then shot right to 370. But I also talked about the importance of the fact that if it got to 370, we either going to get met with some resistance, or if it was to break through, that it will go to 373. Obviously, guys, you see it didn't break through, and then it proceeded to go down. Okay, we're going to stop right there because there's a lot to unpack with just that little bit of information. Okay, so we had the run up from Thursday. Okay, then it took us to like 365. I made a video talking about from here we would go to 369, 370. We did that, guys. I made a couple $1,000s just off of this move from that 368 level to the 370 level. Okay, that's how powerful options are. But what I didn't do is what I call my pick six. Listen, guys, I'm a self-taught trader, and so my whole swag, my whole lingo may be a lot different than the traditional people, the ones that just learned this through the book. Okay, the end of the day, the results are the same. All right, and I salute all of those guys because they're phenomenal. Okay, but again, we go about this a little bit differently. My normal play is the pick six, which was to catch it at 370. If I didn't see it break, I was supposed to buy a put right here. I was so busy doing my money dance off the call, I was supposed to turn right back around and buy a put right here to ride this down, and I missed that move down, but I did catch the chop. Okay, the lesson I want to teach you guys though is this. Okay, look at over here on Thursday. You see it just traded sideways. I mean on Wednesday it traded sideways, but look at where we happen to be at today. It traded sideways in that same exact range. Anything that makes a strong move up it will come back down. And the same is true to the downside. Okay, so already you can see we hit 370. That is a supply zone. Okay, and then now we are headed back down towards the demand zone. All right, the demand zone will be right here. I'm gonna say 349, but I'm just gonna say 350 to give us a smooth number. Okay, so you can already see it is halfway through the move already based off of Friday's price action. So it hit 370 and then it got knocked. It hit 370. I can't get it there. It hit 370 and then it started coming down, and now we ended at 357. So to complete this move, the next stop from 357.67, I'm looking at 353. Okay, again, not being greedy, taking what the market gives you. Continuing to the downside after we hit 353, I'm looking for 352 and then eventually this 349.89 level or 350 to make it plain. But that's to the downside. If some news come out on Monday and things begin to reverse, okay, we already at this level right here. This too is a demand zone. It went from here to here. Okay, that showed you, and it lines up with what happens over here. Okay, but any strong move likes to retest the move it made. So we hit 370. If we are going to go back up, guess where we're going to go back up to, guys? Another test of 370. That remains to be seen. We got a lot of bearish sentiment, so the path of least resistance is to the downside. But I always want you to react to what you see. Don't just get in your head that it's going one way or the other. React to and then first see what it's doing and then apply the levels that we talk about every day. Okay, so from 357.67, guys, the next stop ultimately, just to make it plain, will be 350 from here. Now that's a pretty nice move if you guys want to take advantage. So what I'm thinking on Monday, for instance, these are two scenarios. You're going to always have two scenarios at minimum to choose from in the stock market. If we are going to continue down, you might first see a pop. Okay, the pop may take us from 357 maybe back to let's just say 362. Okay, 360, 362, 363. Okay, boom. We will see if that holds. If it doesn't, we already know that's a failed reversal and we're coming down. All right, and we're coming down not only to the 357 level, but the 353 and ultimately 350. If we dip down further, but we start to reverse and we don't make it down here to 350, okay, you have to be looking for 363 and then another test of 365, 367, and then 370. Okay, but typically moves like this, strong moves like this, look at this day on Thursday, a strong move like this will ultimately retrace and come all the way back down. You can already see the pattern starting. So I want you guys to spend some time looking at what you see. If you just look at this area right here from 362 all the way to 357, what is the most likeliest path that it look like it's trying to create? You can just see, if we was to draw a line right here, you can just see it wants to come back down here. Okay, nothing happens in a straight line, but they can gap and go, meaning gap down and then continue to go down further, and to get it over with, it can dip and rip, then come back down off a failed reversal attempt. But nevertheless, guys, these are some scenarios I want you to look out for. So for me, I come into the game with a clean slate each and every day. So Monday, I'm gonna wake up, I'm gonna do my DD, I'm gonna do my research, and I'm gonna prepare for battle. Okay, I'm gonna see if we're gapping up or down, or if we're just opening up flat. Okay, but I know my levels to the downside, 353 and 350 to the downside, and then another test of 363 to 365, ultimately 370 to the upside. Either way, I want you guys to be prepared and take advantage of what you see on tomorrow. Listen, guys, I hope that was helpful. That's just a little chart work on supply and demand zones that can help you make some more money, but more efficiently in the stock market. Okay, and that's really what it's about, taking responsible trade setups that you like during these kind of times. Okay, so with that being said, use the information we talked about today. See if you can go out, take it really, really low and take it really, really slow. Meaning, you want to at least test this out with one contract, okay? So you're not risking a lot. You want to make sure you got the direction. You want to be on the right side of the trade. So you want to make sure the direction is first trending where you want it to be trending at, okay? And then you be ready to strike, okay? To the downside, we're looking for 353 and then ultimately 350. At that level, you watch and wait because it can bounce from there. That's a demand zone and then go back up. If we don't get that and it start going up on Monday for some odd reason, okay, then you know 360, 363, 365, and 370 is back in play, okay? But react to what you see. Don't guess. Don't gamble, react, all right? Do me that favor, guys. I hope this was helpful. Listen, we make videos like this every day, so if you like this one, make sure you check out the next one. Remember, most people see the end result. Very few consider the journey. Do me a favor. Don't forget to like and subscribe to the channel. Make sure you guys grab some free stock using my link below, and I'll catch you guys in the next one. Peace.